So the US oil analysis for Friday 10th of November, US oil, also known as WTI. So the last video I did was the analysis for the 7th of November. Now since then we've had crude oil inventories, which was this candle. Was it this candle? No, surprisingly enough, it was not. We've had crude oil inventories, and I think there was a build or something. A build, and obviously we had the EIA report. We did see a spike up. We did see some selling momentum coming to the market, but since my last video in around the 7th, let's just grab a pen. In around the 7th, we've been pretty much in a consolidative range, really. We've not seen much momentum coming to the market, as indicated by the size of the candles and there being no directional bias. So we've got a degree of indecisiveness. We've had a case of bullish and bearish candles which are very small in size, not indicating much range to them, and we've been pretty much in a consolidative range since my last analysis video. Now, where do we expect prices to go? Now, we've had a very strong extended run to the upside. So we've had a series of higher lows, but at some point we do expect to have exhaustion, pullback before we do see a continuation to the upside. So at present we are in a bit of a consolidation, which isn't too unusual after seeing a very strong trend to the upside. So this consolidate. Let's just get the pen on. Let's just get the pen on the charts here. So this long consolidation is not unusual, especially as we head towards the end of the week. So what we might see is, after seeing such a strong move in the prices, let's see. So this week began in around, it's about the 6th. So we did see a move to the upside, and we're still trading in bullish territory as long as we do stay above this 55. A quick look on the charts to see where 55, where it is 55. So about there, 55.65. So in around a 55.65 level, if we do remain above that 55, well, I could say it's 50. Yeah, I'll use 55.80. So if we do stay above this 55.80, then we're still in bullish territory for the week. But at some point, we should expect a bit of a pullback on the US oil, whether it is profit taking or there might be a turn in the market. So we should expect a pullback, a short side pullback, before we see a long side move. Well, should see a pullback before we see opportunities for a move to the upside. Now, where we are at present is a bit of we're in no man's land, essentially. This long consolidation, it's difficult to predict when we might break from it. Usually the catalyst we do have are OPEC reports, and we've got the EIA new and the APIs on Tuesday, EIA on a Wednesday. Now we've had the EIA. We've not seen much apart from this spike there, as well as this consolidation. So overall, we are still long biased, and we are expecting prices to go up to $60 a barrel in the medium to long term. But over the short term, I would expect a pullback at some point. Pullback possibly down to let's see, back down to, let's just see where the downside target would be. The downside target would possibly be this swing low over here. So let's just see where that swing low is before we see some buying momentum come back into the market. So this swing low was all the way down at 55.63. So possibly we might see a retracement all the way down to 55.63 before we see it move all the way back to test the previous highs just there in around 57.50, and those most recent highs, probably the highs of I think it's the yearly highs actually. Just bear with me a second. I'm just gonna have a look at. I'll have a look at the. We'll have a look at the weekly time frame. But so far these got these highs in around 57.89. So before we get all the way up there, we'll be targeting 57.47, so about 57.50. But we are expecting a retracement at some point. And if we do get a retracement due to profit taking, and so on Friday. I would expect the lower end of that range, possibly to be in around that level identified as well, in around that 50. What was it? 55.63 was it? 55.63. Yes, we're looking for that 55.63. See our price direct around that 55.63 because along down where we got the along. Let's just get the wording here correct. So if we do get down to 55.63, we would also have the confluence of the 200 period moving average. Again, 55.63 would be a minor level. Coupled with a 200 period moving average, we may see a bounce in prices. But the height of the channel previously was at that 55.21. So we may retrace. It would be pretty much. It would require quite a deep retracement actually to get all the way down to 55.21. But if we do get a return to 55.21, maybe at some point next week, after seeing a retracement, whether it's profit taking or a turnaround in the market, we could potentially see a bounce in prices. And the bounce in prices, we may see a bounce all the way up to 56.50 from this 55.21. If we do retrace down 55.21, we may see a bounce all the way back up to the 56.50. Now, if we do break down, we may not get all the way down to 55.21 on Friday the 10th of November. What we might do, however, is we could potentially get down into a bit of a zone. So let's just have a look where the upper end of the zone is. So we might get down to, where is that? Let's just bear with me a second. Get down to 56.26. So we might get down to 56.26. Well, it's not really that far away, is it? 56.26. We might get that all the way down to 56.26, and lower end being around at 55.81. So in around that 50 pip zone or so, we could potentially see prices come down there before we see a bounce. So we might come down all the way down to here, and we'll see a bounce to the upside. If we do successfully break below those levels, we'll be looking for that 200 period average, as well as that the level which was previously resistance in around 55.21, acting as support. So previous resistance now acting as support for a potential upside bias. Let's just have a look at the weekly chart before having a look at the daily chart. So on the weekly chart, it's pretty clear here. We've had the move from the bottom of the channel, and in most recent weeks, we've had 5 consecutive weeks of bullish price action, candles closing near their highs. As you can see here, we've broke above our previous highs there. So we're trading at the highs of 2017 so far. We've broken above this range, and we're trading at twice. Now we do have the on this weekly time frame, we do have the what is that? Is the 200 period moving average coming up? So let's just have a look where 200 period moving average is. Let's just see where it is at present. I can't imagine we'll get all the way up to no, we won't get up to 200 period moving average. But the 200 period moving average on the weekly time frame is currently sitting at 58.75. We're trading at 57.03. 200-ish pip. 200 cents. Well, 200 cents. $2 essentially. 200 plus dollars. Well, not $200. Sorry, $175 to be exact. $175 would be 175 cents, $1.75 on US crude. So 175 cents, $1.75 to get up to that 200 period moving average on the weekly time frame. And again, if we do successfully navigate that, we'll be talking $60 a barrel. But 175 cents, it is possible with a catalyst, but I can't imagine that 175 cents would be made up on Friday, the 10th of November. So we're just going to have a look at the, because we already identified this isn't a very strong uptrend more recently. We've had 5 consecutive weeks of bullish price action. Just going to have a look at the daily chart. And on this daily chart, it's pretty clear here. We've had our lows, had a series of higher lows. We've had a series of higher lows, broke above these this swing high over here. So at present, we've had 2 consecutive days of somewhat bearish price action, followed by a third, which is a bullish day, which is on Thursday, the 9th of November. Now, if we do get continuation, if this get it on here correct. So what I'm looking at, I haven't seen the candles here. The bearish candles are not very large in size, not indicating that there is a strong bearish momentum coming into the market. The candles are, I wouldn't say they're closing, well, they're closing pretty close to their lows, but they've somewhat been invalidated by the most recent candle on Thursday. So overall, we do still hold a bullish bias. So we could potentially see retracement and a bull flag form before we go all the way up to 58.28, and we move on to 58.75, which is 200 period moving average on the weekly time frame. So overall, we are still biased to the long side, but we do appear to be forming a bit of a bull flag. So we might get further retracement, possibly all the way down to possibly down to $56 before we do get a bull flag continuation all the way up to 58.28. But overall, with a series of higher lows, we are still expecting moves to the upside. So that should wrap up the US oil analysis. So before I go, LCS, like, comment, subscribe. Thanks for watching.